What if I told you the modern world wasn't built by kings or armies? To understand today's world, we need to go back to the beginning.
Although today's international banking system appears to be a highly complex structure, its original purpose was simply to make people's lives easier. There are more than 30,000 banks operating on a global scale, and the top 10 alone manage nearly $25 trillion. Yet this enormous system originally emerged out of a much more modest necessity. In the 11th century, Italy was the commercial capital of Europe. Merchants from many different countries came there to sell their goods. However, there was a major problem. The region was filled with different currencies from various nations. A merchant in Pisa might need to recognize and handle 7 different coins in a single day. Since people constantly needed to exchange money, those who carried out this work began sitting on benches in the streets. The word bank originated from this practice. Derived from the Italian word banco, bench, travel during that era was extremely risky. Counterfeit currencies circulated freely, and obtaining reliable credit was very difficult. For this reason, some entrepreneurs began offering loans, and merchants from Geneva additionally developed cashless payment methods. Over time, banking networks spread across Europe and expanded rapidly. Banks eventually began lending not only to merchants but also to kings and even the church. Today, the fundamental function of banks is risk management. People deposit their money into banks and receive a small amount of interest in return. The bank then lends this money to others at a higher interest rate. Naturally, not everyone repays their loans, and banks calculate this risk to generate significant profit. This system forms one of the most important foundations of the modern economy. People buy homes, companies grow, and investments are made. In other words, banks take unused money and transfer it at a cost into areas where society needs it the most. Bank sources of revenue are not limited to loans. There are many other profitable services, such as foreign exchange operations, credit cards, and custodial services. However, one of the major issues in today's banking system is the pursuit of short-term, high-risk profits instead of long-term financing. In the years leading up to the 2008 crisis, many large banks sought quick returns through complex financial products. And the result was catastrophic. Major banks such as Lehman Brothers began issuing home loans to almost anyone who wanted to buy a house. When the housing market collapsed, the effects of the crisis spread across the world. Stock markets plunged, hundreds of billions of dollars evaporated, millions of people lost their jobs, and national economies suffered severe damage. Banks were forced to pay billions in fines and lost a significant amount of public trust. The United States and the European Union created massive bailout packages to prevent major banks from collapsing. Toxic assets were purchased, new regulations were implemented, and banks were required to allocate emergency funds. However, some of the stricter regulations were later relaxed due to pressure from powerful banking lobbies. Today, new methods of accessing finance are spreading rapidly. For example, new generation investment banks that operate with annual subscription fees and do not charge commissions aim to provide more transparent and honest services. Credit unions, established in the 19th century as an alternative to moneylenders, also offer banking services but prioritize social benefit rather than profit. Since members are both customers and decision-makers, these institutions function more democratically. Their cautious approach to risk meant they suffered significantly less damage during the last major financial crisis. In recent years, crowdfunding has also become a major global trend. Platforms where people can lend small amounts of money to each other rather than relying on large and difficult investments have emerged. Many technology startups were originally launched through platforms like Kickstarter and Indiegogo. People enjoy supporting these projects, and because the risk is distributed across large groups, major losses are rare. There are also microloans, which differ from large-scale macro loans. These small loans, especially in developing countries, help individuals who lack capital to start businesses and lift themselves out of poverty. Today, microfinance has grown into an industry worth billions of dollars. In conclusion, banking may not be something that naturally interests you, but ensuring access to finance is vital for the functioning of societies, countries, and even individuals. Who will provide this service and how it will be delivered in the future depends on the decisions we make today.